Bitcoin is at a major decision point as the yawning abyss of 8, 7, and nay 6,000 loom below us. Will we descend into Cthulhu's lair, or will the sweet, glorious ambrosia of the all-time high be within our grasp before the halvening? Meanwhile, XRP continues to unload its bags on an unsuspecting, if you don't watch this channel, public, and we discuss Portugal declaring cryptocurrency completely tax-free in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live here in the Cracking Cryptocurrency studio, Friday, August 30th, 2019, foul year of our Lord, your daily source for market updates, sentiment, and news for traders and investors. And just people, you know? I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you're all doing well, and hopefully you're feeling great wherever you happen to be tuning in from, whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in that live chat that we got down there, and hit the thumbs up button. We highly appreciate that. Today's episode of Breaking Bitcoin is brought to you by us. If you are an aspiring trader, an experienced trader, looking to sharpen your skills, or anywhere in between, make sure to head over to premium.crackingcryptocurrency.com, top link in the description down below. If you want to sharpen your skills and work with a team with a proven track record who deal in the realm of probability and statistical edge, premium.crackingcryptocurrency.com. And we've got a fantastic show for you today. I don't even know where to start. We're going to talk about so much today. We're going to talk about the predictive power of the Ichimoku cloud. We're going to break down our analysis, which has been going quite well. We're going to talk about the altcoin market cap as a leading indicator. We're going to discuss, I posted a analysis earlier this morning on TradingView with my morning analysis for the group. And we're going to talk about the altcoin market cap's predictive power. Now, again, we don't want to descend into the realm of wishes and fishes, but I do want to talk about it because I do think that it is interesting and important. We're also going to break down Ethereum's price. But again, we can look at the dollar pairs and really understand that they're going to follow Bitcoin's price, and where the edge is going to come from is going to be in volatility, right? You know that the directional bias is generally going to be the same. It is a rare cold day in hell when we see Bitcoin USD move down and either Ethereum, EOS, or XRP USD move up. Now, the only one there that I would put a caveat on is the XRP. But that's enough of this scene. Let's get into what you guys came for. And we're going to start off today's show, as we always do, by giving away some cryptocurrency. I want to thank yesterday's crypto comment giveaway winner, Wendy Brown Eye, third day in a row that individual won. Congratulations to you, sir, being very generous yesterday and asking us to donate that to, he didn't directly ask us to donate to the Water Project, but we are donating our charity to the Water Project this year. And so we're going to add that to our monthly Water Project donation starting off in September. And let's get away and give away some crypto. So I want to thank this month's crypto comment giveaway sponsor, X42 Protocol. Make sure to go check them out at x42.tech. And here we are in the live scene, guys. Thank you for joining me. We have switched locations. We have translocated to Singapore. And here we are in the YouTube random comment picker. Yesterday's video was a fantastic show. Make sure you guys go check that out if you have not already. We're going to load the comments, and we've got 11 potential winners. The title of yesterday's video was Epic Bitcoin Crash, the Aftermath, Forged Gold, and Delayed Ethereum Hard Forks. Randomly picking a winner, DarkRico. Thank you so much, my good friend. He says, learning so much with the Cracking Cryptocurrency group. Keep cracking it for us. Thank you so much, man. Highly appreciated. It's always a pleasure to have you in the group. You're a wonderful individual to talk to, and congratulations, my friend. Get a hold of me in the Discord. You know who I am, and I will tip you some crypto. So let's get over into the live scene. Okay, we've got the daily chart pulled open on Coinbase. Now I want to get my notes here for today because there's some stuff that I want to talk about. And we'll start off today just by breaking down Bitcoin's price. And I've got everything pulled over here. I think it's a good opportunity to thank the new members to the community. We've got Kobe, Pietro, Kurakacha Mohammed, and Kitchen Spiral, and Antonio Rodriguez. Thank you so much for joining us over there and joining the CC community on YouTube, my good friends. All right. So, where were we? And let me know how you guys are doing in the chat if there's anything you guys would like. Arg! Yeah, sorry, we couldn't do the 4 days in a row, Wendy. All right. Let's say hello to today's viewers. Human from Earth, what's going on, man? Darren Garish. Let's see, we've got Elijah Finch. We've got JLD all over, Wendy Brown Eye, and Jake. I always want to be like, since you got spaces in between your name, Jake, I want to be like Jake, you know? It's like a drawn out Jake. But anyways, all right, guys. So let's break down. Let's break down today's price action. We'll start off, this has been very good for us, I think. Keeping it simple. Going to the monthly, we're going to take a look at the BLX Liquid Index as well. We're going to take a look at a few other things. And we're just going to stay very consistent with what we've been saying for the last few days. We're going to bring up the lines. And as I talked about, if you guys are confused about the introduction of some more classical technical analysis, we talked about that yesterday and the day prior. I want to make this channel as accessible and easy to follow for everybody to get good, valid technical analysis. Keep in mind that our directional trades, the trades that we actually put on, are going to be determined and signaled by PTP, which is our proprietary strategy, but that does not preclude us from looking at classical means of technical analysis to give a little bit more nuance and direction, as well as having something to talk about every day because they are directionally relevant. Anyways, this was the monthly setup that we talked about. We set this trade. You can see the entry point was exactly at the point in time when we set this trade. This was going to be several days ago. Starting off on Monday, I think is when we constructed this. It was actually right prior to the movement down. Okay. So if I lose more than I profit, no taxes. Yeah, you can reduce your tax liability. But that would be, if you have to worry about paying taxes on cryptocurrency, then you're doing good as a trader. That means you're making more. That means you're making more than you're losing. So anyways. Here we are on the monthly chart. And again, the only levels that we have really of significance, of importance coming in here on the monthly is going to be that range from 85.54 to 77.27. And we've drawn the take profit for this monthly swing down to 81.44. Now that's fairly arbitrary. Just a good medium point, just a good median between those two ranges. Those ranges have significance not only as monthly resistance, as monthly liquidity, as we can see in this form over here, monthly liquidity block. But we have to be careful about that by putting too much emphasis on that monthly area of liquidity. I'm sure, as you all will recall, going back earlier into December, January, February of this year, even myself making a whole lot of hullabaloo over the potential $6,000 area of resistance. How long we stayed there, the shelf, the significant level. And as we know, Bitcoin just blasted right through there on a rocket ship, gave no fucks, and just continued carrying on its very own merry way. So we have to be very careful about putting too much import on these levels. And that kind of reminds me, if you guys, they're not affiliated in any way. It's just a podcast that I enjoy listening to. It's Chat with Traders there in Fifield. It's, sometimes it's hit and miss, but it's overall good quality content. And he had Mike Komaransky on the other day on the latest episode of Chat with Traders. And Mike Komaransky is an OG in the Bitcoin community. He's a very unique individual, and he's a professional trader, and he trades a very specific edge. And I think that's a fascinating episode for you guys to go listen to if you guys want a peek into what professional cryptocurrency trading looks like, how cryptocurrency trading is handled in the trading desk realm, like again in the realm of professional traders and professional trading desk operations receiving institutional funding and capital and backing. And just overall, it's just a fantastic article. But something interesting that he talked about in that episode was levels, because he despises technical analysis, and he akins it to astrology, which is something very similar to what I do. We talk all the time about how technical analysis is not designed Its true purpose is not prediction. It is not prediction. It is not to be able to tell you when or how something will occur in the market. Technical analysis, for me, and the way that I teach it, is a system to tell you to derive a statistical edge, right? So when we break down PTP and we execute our trading strategy, what we are doing is we are using objective mathematical measures of the market that produce signals, that produce quantifiable objective data that we can observe for patterns that we can find repeating themselves over time, and we can derive expected probabilities out of this, right? When you look at any single individual outcome, its result is generally going to be random. It's not actually random, but to the purpose of being actually able to derive any kind of predictive ability or probabilistic mindset off of one single occurrence in a data set, it basically comes down to a coin flip. But what most people don't understand and struggle with is that given a large enough data set, you can derive probabilistic outcomes and derive a statistical edge. And if my equity curve is any account for that, it does work. And if the equity curve of any of my students is any account for that, it does work. And this is utilizing technical analysis objectively, defining exactly what your parameters are, sticking to those, sticking to the plan, sticking to the strategy, and using technical analysis to initiate movements based off patterns that you have seen repeat, that you know have a predictive outcome, all right? At least one that stacks the odds in your favor. It is a numbers game. It is very akin to professional gambling or playing numbers in a professional type setting. So that is how we utilize technical analysis. That is how I utilize technical analysis. So anyways, but one of the things that he said there was, he talked about, how, Aaron Fifield brought up the $6,000 level. He's like, well, that was a major support level for Bitcoin. That cannot be denied. And when it broke, and then, Mike kept pushing him. And I think Mike was making a good point. He's like, okay, so price was at 6,000 for a long time, and then it went below 6,000. So what does that mean? Does that mean price is going to go to 59.99? Does that mean price is going to go to 59.98? Does that mean price is going to go to 5,000 or 4,000? I mean, whoever is claiming, and he makes a great point, whoever is claiming that a level is a level or significant in any way, the burden of proof is on them. The burden of proof is on them. So I think that, he makes a very good point on calling out a lot of technical analysts because, and again, this is exactly what I do as well, for using unfalsifiable language, right? So something that we don't do on this show is, and something that I've seen many technical analysts do because they're more focused on being right, especially ones on Twitter and a lot of ones on YouTube. They're more focused on being right than making money, in my opinion, right? So, the mindset of success, the mindset of wanting to succeed also means setting your ego aside and being willing to be wrong. So there have been times, many times, when I have a theory of how the market operates or a theory on how to derive a statistical edge, and my theory proves to be invalid. And instead of attempting, as most people would, to tie my identity, to tie my ego to my idea, I realized that my idea was wrong, and it is more telling of my potential success in the future to have that inquisitive mindset, to have that curious mindset, to have that testing, to have that hacking mindset, as I like to call it. The mindset to test, twist, tease, find out what you can make something do, find out what you can derive, and that is the entrepreneurial hustling mindset that unfortunately is not taught in our schools and is not taught by many parents nowadays. But that is the mindset that I like to promote and that I like to congrue myself to. So just because you have a theory that's wrong doesn't mean that you are dumb. Doesn't mean that you are wrong. It just means that your idea was wrong and needs refining. And you are in the right place by questioning and testing and teasing and looking and trying to find the answer and trying to find new ideas and new ways to trade, because the market is ever shifting and you have to adapt to the market. So I think that was a good little tangent there. Anyway, so looking again at these monthly levels, we want to be careful about putting too much import on the shelf of this monthly level of support, or resistance at 77.27. But again, that area coming in at 85.54 to 77.27, and looking for confluence as well. We are going to bring up our EMAs, and we do have our 8 monthly exponential moving average coming in right in the median of that level, 79.96. And what's more interesting about that to me is the 13. You guys know all the import that I place on the 13 exponential moving average for, in my opinion, its fantastic ability to signal momentum, to signal trends, to signal trades. The 13 exponential moving average has worked well for me across all asset sectors. But particularly well in cryptocurrency, particularly on the daily, but also on other timeframes as well. And we see that here on the monthly. Now, where is that level at? That's at 73.35. So that is below our box. But again, if it would take us several months to get there, my hypothesis would be that that 13 exponential moving average would have enough time to rise up into that box and be supporting price right pretty much where our 8 exponential moving average is sitting right now in the $8,000 to $7,900 level. Now, this is going to become a little bit more clear when we go over to the weekly and look at kind of the first area to fail, but we're going to start off there and just be looking at that level. Now, we'll go down to the weekly. Now, the weekly is the first area that I want to look. Here was the weekly setup. It had a less favorable risk to reward setup on this particular movement, and this will kind of become a little bit more nuanced too when we go down to the daily. But the first level here is going to be 90.42, 87.76. We have, again, it's not extremely predictive going back into price. Going back into previous price history, but it's just more recent SNR because we do have this. It's actually a daily block, but this is extrapolated to the weekly time frame. It is a weekly level of resistance that is broken through on this candle, which did lead to a massive weekly movement to the upside. A fantastic trade, even though the closing basis of that candle was not very predictive for us because it was just these large topping behavior movements on the weekly time frame through 3 periods, 3 weeks of overall consolidation and massive pumps to the upside. And of course, we were there, guys. You guys recall. And again, I want to give a big moment of silence for our fallen brethren who did end up buying at the top of these wicks. But again, it's going to happen in any market that you go to. So that level, 90.42 to 87.76. So there's a lot of confluence there. $9,000 psychological level. There's a lot of confluence there. We have resistance. We have an area of support. So this is obviously an area of liquidity where individuals have been buying up. It is obviously an area where individuals were keen to sell on the way up. Individuals sold at 9,000. And I don't want to chide anybody that sold at 9,000 because if anybody accumulated in this region and sold at 9,000, they did very, very well on their money. Let's just take a basic extrapolation of purchasing and selling at 9,000. That is 151% gain, a gain that would be almost untenable in any other market in any other sector in such a short period of time, minus the penny stock section, which one could argue that Bitcoin is more accrued to than something like commodities or something like indices. So that is the first level of import. There is going to be resistance and support, i.e. liquidity. A movement down there would be sweeping liquidity of these lows. So that's a logical movement. We know how raids occur. We know how sweeps for liquidity occur. Now let's go and look at our EMAs and bring up another level of confluence. Well, our tertiary baseline is coming in right at that level. Our tertiary baseline coming in right at 89.77, giving more confluence to that $9,000 area. So I think that level is important. I think that's the first area to be targeting. Now we already hit on the group and my personal Bitcoin short. We already hit take profit 1, i.e. our stop losses at break even, and we have our further take profit targets down, fairly congruent with these levels on the weekly. But again, those levels are dictated by Quadrigo and not necessarily from this analysis. Now, really descending below that level, do we have confluence? Do we have some kind of statistical confluence here? Excuse me, not statistical, but do we have some form of technical confluence for those monthly levels? Let's go back and identify those monthly levels again. 85.54 to 77.27. So that's quite a wide range. That's quite a wide variance. Remember, we're talking about the monthly here. And again, we've seen these monthly candles be $3,960 candles, and that's from open to close. So let's go back to that weekly and realize that that's just not that's not completely untenable. And the really first level of significance that I notice here is going to be the weekly 100 simple moving average that is coming in at 75.73, and the weekly 100 exponential moving average coming in at 74.20. So less, that's the 55, the 100 exponential is coming in here. So less predictive. I don't think that the weekly levels have not been very powerful for us. One can make the broad argument, as we can see here, that when the weekly 100 was broken, we did descend down to the 200s, and then when it was broken to the upside, it did signal a bullish trend. But really, in my opinion, rather than the 100 acting as any form of predictive power here, and let me just make sure that my words are correct here. Yeah, so this is going to be our simple 100 period moving average on the weekly. Rather than assuming that has mass predictive power, and it kind of does on the daily, and we'll point that out when we go over to the altcoin market cap. For me, the secondary baseline was far more powerful. So let's just take some of these off. We'll just go over to the style tab, and we'll take a lot of these off. Except for the weekly 55 exponential moving average. And again, this is why the 55 exponential moving average is my secondary baseline. So let's compare the 55 exponential moving average to the 100 simple moving average here on the weekly time frame. And which one do you think has more predictive ability? Which one do you think signaled the bearish trend? Which one do you think acted as a dynamic level of support and resistance? And which one do you think that once these levels were broken, initiated very powerful signals that would be congruent to your daily time frame signals? Well, clearly, I think objectively, that is the 55, which is going to be this silver line that we see overlaid on price, as opposed to this 100 simple moving average, which does not seem to really have any direct interaction with price whatsoever. So taking that definitely with a grain of salt. Again, it's kind of one of those things where very similar. If we go down here on the weekly time frame, we can see the weekly 200 and simple 200, which did support price, which was the absolute low of Bitcoin's price in December. But again, we have to talk about those levels had just occurred. And it's one of those things where, oh my God, it's like it worked once. So there is a difference between coincidence and confluence and causation and correlation. So anyways, so that 21, our tertiary baseline, which again also is a good level of dynamic support and resistance, is coming in at that 89.77 level. And I think that is really the first area. So that gives us a much tighter range. That gives us a much tighter take profit level. That 8,700, that 87.80, let's round up to the 90.50 region is going to be the first significant level that I think we're going to get some more significant buying pressure. And I think a good area to wait, pause, and re-strategize your position depending on which way price breaks. That is a likely area where consolidation is likely to occur, or could break right through it. And you have to have a plan for either one. I'm getting information that we do have live footage of the order book at 9,000. Yep. Thank you, Tom. Yep. Live footage of the order book at 9,000. And, and coming back over to price. So now let's go to the daily, and we'll do our daily analysis and break these levels down and really talk about where we are today. So first off, let's look at our indicators. And we talked about this yesterday. We talked about when Minx does go oversold. Occasionally we do see bounces. But in my analysis, in back testing Minx, there's not a whole, it's hit and miss. It's hit and miss. And again, I kind of have to take the overall market structure into account. Now, this is pretty obvious to see. 1, 2, 3, 4 tests of support. And that's where we are right now. And so there can be no chiding anybody who decides to buy at these levels. It is a decent risk to reward setup. You see something that has worked prior, you see a pattern that does repeat itself over time, and you take the chance. I don't think that we're going to get that significant of a bounce here. I talked yesterday about the likelihood of the bounce to $9,800. We didn't really see that significant a bounce. We did see a bounce to 96.32. We did say 96 to 98 yesterday, but it's very unclear for me whether we're going to have more follow through on that, whether we're going to consolidate here for a little while. But again, my directional bias is to the downside. My money is where my mouth is. I am in an active short position. I talked earlier, at a previous point in time of what exactly I would need to see to invalidate that. So let's break that down. There are a few things. The first thing is going to be over here on the weekly time frame. If we rally and close back above the weekly 13 exponential moving average, our weekly baseline, I'll be looking at that as an indication to exit my short position, not necessarily to go long, but to exit my short position and either stay hedged to exit my full risk short position and stay hedged, or potentially begin scaling back into Bitcoin as we continue to move up. Coming back down here to the daily, another thing that I would need to see is obviously if we cross and close above the daily 13 exponential moving average, that's going to be an indication to be out of my long. If we get minks crossing back above the trigger line, that would be an indication. And I won't be really perturbed if Wadatar explosion on the daily begins printing columns beneath the explosion level or beneath the dead zone filter, because that is kind of to be expected. It is kind of to be expected that we would see lower volume and volatility at this point in time, because it's a major turning point for Bitcoin. I mean, we are, again, like, it doesn't take a genius to see that we are at a significant price level, a significant level of support, a significant level of previous resistance that we blasted through and kind of delineated this structure. And we've been bouncing around in this ranging market structure for nigh on 2 months. And as we go into September, as we move toward Q4 2019, and as we kind of, everybody gets heated up, all the analysts are coming out, all the predictions are coming out, all this and that. But I think that what's more important is to just understand where we are. This is an area, if you caught the short, that's fantastic. It was a good movement. Everything kind of screamed for the short, but it's an area in time where you want to be cautious, and where you want to be prepared, because there's three possible scenarios that could occur from here. And I know, again, that's like it wishes and fishes, but let's just talk about those and talk about your preparation for each. Talk about your preparation for what the market is likely to do and how you will respond, because that is the point of technical analysis. That is the point of trading, is having a plan and sticking to the plan, not having a plan and then the parameters that you have set happen and then you don't execute. You've got deer in the headlights because you failed the plan and because you lack conviction in your execution. Create a plan for the three likely outcomes and what you will do for each, right? So scenario one, we bounce from here. Okay, we talked about what we would need to see to be exiting our short position and entering into a long. Minks crossing and closing above the signal line, crossing and closing above the daily 13, crossing and closing above the weekly 13. Boom, bam, done. Put in the tank. What will we need to see to scale further into a short position? I would say a massive breakdown, a rising explosion level of Wadatar explosion at this point in time. If we can get the Bollinger Bands separating, again, another strong indication that I talked about earlier is closing this monthly candle. I'm kind of waiting to see that monthly close. If we go over and look at our EMAs, we can look for some EMAs like that, crossing and closing below the 21 weekly exponential moving average, going over to the daily. We've already crossed and closed below the 100 exponential moving average, so potentially that was already your initiation signal, and entering on close back retests of that 100 exponential moving average on the daily. So those are plans that one can have. And what's the other plan? Okay, well, the other plan is going to be falling more into liquidity grab, order block style trading, which I didn't really want to do that. So let's look at, we've got our daily order blocks right here. So the other potentiality here is that you might already be planning for is wicks down into our order block, which one would be filling long positions up because that's order block trading. The other thing that I would be that is a potentiality is sweeps down to 9,000, is wicks down to 9,000. Why? Because we've got daily low wicks there, i.e. that is a level of demand. That is a level, or that is a current level of demand that is yet to be invalidated, because that is the level that is supported price. So wicks down into that area, putting limit bids there and being prepared to buy. Now, for all those scenarios, you need to have things that invalidate that trade. So I would say a daily close below any one of those wicks would be an invalidation of that liquidity grab method of trading. And similar to the order block style, if we cross and close below the current order block, which is sitting down at that 93.33 level, so anything below that would be an exit indication for the order block long. Yes. Okay. Now, let's go down to the 2 hour. Well, hold on. I want to make sure that our daily levels are congruent here. You know what? I would like to keep those daily levels on the LTFs. Keep that there as resistance. Order block 1, order block 2. Cool. I did want to point that out before we move on to the next level of analysis, which is the next order block, the next daily order block, which one could argue is also congruent with the liquidity sweep, does line up perfectly with our higher time frame targets, 87.72 to 87.32. Very tight $50 range, actually a $40 range. And that is going to be, again, congruent with that weekly level. It's going to be congruent with that monthly level as well. So, and do we have an EMA that is congruent with that? Not really. Maybe the 200 exponential, but that is pretty slow. So it might be there. It might be there. Okay. Let's go look at, I want to point out, let's see here. This isn't it. I thought I had that tweet earlier. I can't remember. I think it was Trader Main. Trader Main on Twitter. He posted this, and we're going to break this down. And so he tweeted a BLX index chart, which is the Bitcoin, which is the Brave New Coin Liquid Index. And he had thrown the Ichimoku on there. Okay. And so let's talk about this. So this is the BLX. This is generally considered the industry standard for historical technical analysis. Although, you know, I kind of disagree. I don't really like it, but that's personal preference. So here's BLX, and he's pointing out, well, where we are is right at the bottom of the cloud. And he just tweeted out, what does the cloud say? And, you know, we can kind of go through the responses. There was a lot of responses. A pretty popular tweet over there on Twitter. But you know, I kind of pose this question to you. Like, what do you guys think that the cloud says? And again, you know, if you guys are unfamiliar with Ichimoku cloud theory or how to utilize the Ichimoku cloud as a trading system, you guys, please go check out my Trading Crypto 101 video on the Ichimoku cloud. I really do think it's one of the most comprehensive Ichimoku videos out there because I cover a lot of things that I don't see other people cover. So edge-to-edge trade is completed. You can see that we did pierce down into the cloud. We retested and found rejection not only at the top of the cloud, but also off the Tenkan-san. And we have completed basically the edge-to-edge trade, landing right at the bottom of the green cloud. Now, if we pierce the Kumo cloud, that's going to be a Kumo cloud breakdown. And would be a fairly bearish initiation sign for shorts. Now, again, I'm using the cryptocurrency settings, the settings that I like on the Ichimoku cloud, 20, 60, 120, and 30. Now, you might be utilizing different settings. You might be utilizing the default settings of 9, 26, 52, 26, and that's absolutely fine. That is your own preference. But I find that these give better signals, especially for directional swing trades. You know, if you kind of want to know when to be holding Bitcoin and when to be out of Bitcoin, you know, TK crossovers on the BLX index is pretty good. It's not going to give you the highest possible alpha, but it's going to do you a lot better than anybody else. Here's the crossover. Here's the cross under. Buy, sell, buy, sell, buy, sell, buy, sell. It's pretty simple. Now, I don't want to glorify it like that. It's more complicated than that. It can be more complicated than that, but that's going to be your basic. That's going to be your basic signal. Now, Future Cloud is still green. Now, what is interesting to note here, and again, I don't want to cherry pick, but we do have the bearish TK crossover right here on the 9th of August, which would have given you just a glorious short entry. So bearish TK crossover right there on the 9th of August, 2019. So my analysis of this is that this is not predictive of anything. We don't generally do bottom edge cloud bounces. That's generally not a working strategy. We generally sit and wait and see what will occur first. Do we pierce back above the cloud, making this an overall consolidation? Because when price is in the cloud, it's ranging. When price is in the cloud, you typically don't want to be trading this asset because that is letting you know, danger, Will Robinson. There's not a strong trend. We're going to range around, a lot of chop and pop, maybe switch over to your reversal indicator. So it can be a good fundamental leading indicator on what strategy to be adopting in the market. But really, this to me as a trend following trader is wait and see. We've talked about those other levels of analysis that we could look for on the daily, the weekly, to be exiting our trade, to be potentially looking at longs for this situation to reverse. We've also talked about lower levels that one could swoop up price. But for me, and I think this is going to be very congruent with what we were just talking about insofar as price action and looking at that liquidity sweep and looking at the order book, or excuse me, looking at the order block trades and looking at that lower level at 8,700, 8732 to 8772 is going to be the break of the Kumo cloud to the downside. The bearish close, the cross and close, the daily close below the Kumo cloud on the daily time frame. Always is acted as a bearish setup. Again, it doesn't mean it doesn't have, there's nothing out there that's 100%, but it's a good signal. It's a good, strong leading signal. We've already had the TK cross under, strengthening this a little bit more. So this is what I'd be watching for. If you're unsure of what to do in the market, this would be one of those more fundamental indicators, those more long-term indicators that I would be looking at as well, the BLX index. Or anyways, Bitcoin's price on any time frame. Not any time frame, the daily crossing and closing below the Kumo cloud. That's my thought on that. Now, the last thing that I want to point our attention to is going to be total 2. And I really want to talk about this kind of at length today. So we're going to go to the weekly on total 2. All right. And again, I posted this analysis earlier. And by the way, guys, logarithmic charts. No, linear charts. Logarithmic charts are the result, lead to lots and lots and lots of bad technical analysis. So anyways, linear charts, guys. So anyways, I want to talk about this, and I drew this a long time ago. Right? You guys, I've gone over this at length. I think I made an old post on this on TradingView. You probably could go track it back. But anyways, I posted this a long time ago, and I had mapped out this dynamic level of resistance. This zone of resistance, right? And we used VPVR to calculate this level on the weekly time frame for total 2. Now, this is the market cap, the cryptocurrency market cap, excluding Bitcoin, right? So this is total 2. This is generally referred to as the altcoin market cap, right? So we're just excluding Bitcoin from this. Now, one thing that I want to point out, and this gets very interesting if we compare this with Bitcoin's price, is, we broke this major level of support after we just kind of sat here and bounced around for a while, for about a whole month, right? So pretty much from the middle of July to the middle of August, we just bounced around, resting right on the shelf of support, right? And we broke that level 3 weeks ago, and I think that was pretty indicative of bearish momentum, continued bearish momentum in the altcoins. And over that same time period, what was Bitcoin's price doing? Bitcoin's price was ranging. Bitcoin's price was up and down and up and down and up and down. Not a strong trend. There were smaller trends within that overall macro level of ranging, but I've talked about the distributive pattern that Bitcoin has been putting in for a while. And I've also talked about how you don't know that something is distribution or reaccumulation until after the trend breaks in either dominant direction. And I think that we've gotten pretty clear indications the price has broken to the downside. Now, what I think is interesting about this is it's easy in hindsight to be like, well, it broke support and like all coins went down. But I think what is interesting to me is that as Bitcoin's price was ranging, especially over the last 3 weeks, we see that money was not flowing into altcoins. Money was not flowing into altcoins. Money was flowing out of altcoins in a very significant way, right? In a very significant way. Money was flowing out of altcoins, and that is, we can see in hindsight, obviously. So this is just something helpful to utilize moving forward using this level of analysis, that is predictive for Bitcoin's future price movement, I think. Because if the market were bullish, right? If the market were bullish, then even in ranging consolidation, you would see more buyers stepping in. You would see more capital flowing into the entire market cap, more capital flowing into altcoins. This doesn't really have anything directly to do with Bitcoin dominance or anything like that. I think that you would still see money flowing into altcoins, even if a lot of money was still majority flowing into Bitcoin. So money flowing out of altcoins as Bitcoin's price basically stagnated and moved sideways in consolidation was a pretty good leading indicator that this was not a reaccumulative pattern, that this was a distributive pattern. And then when the altcoin market cap broke to the downside, as did Bitcoin's price, start moving down in a very significant way. This becomes very interesting when you just overlay BTC to USD's price on this. Let's see here. Now, again, I just kind of want to point this out because I do think it's interesting. I'm not exactly sure what I want to make of this, but we do see in this situation, the 100 simple moving average acting as ultimate weekly resistance. And that brings us to where we are right now with the altcoin market cap. So where are we right now? We are sitting, so we found rejection on the 100 simple moving average. And where are we right now? We're on the 200 simple moving average right now. The 200 simple moving average, we did move below it. We did range around here for a while, but this was kind of a very dramatic level. And I think really the signal to move into altcoins, that the altcoin market cap was going to get bullish, is when we broke below and then rebounded back above. And then we had one little fake out and then it was off to the races, right? And again, the weekly baseline acting as a beautiful signal here. You can see the orange weekly baseline right here, right? We're below, you can see where we break below it right over here. And it's basically be bearish on all alts until right here when we cross and close above it, and then it's off to the races. I mean, this is the most fundamental leading indicator that you can use, is just having your nice baseline on there that tells you is price bearish or bullish. You should be able to know with one look at a chart whether an asset is bullish or bearish. And I don't care if you're using the Ichimoku cloud or if you're using a simple moving average or an exponential moving average. Just pick something that works very well, because they work really, really well to give you a directional bias on which direction to trade. So that brings us to where we are right now in the altcoin market cap, resting on that 200 simple moving average, making this, again, two scenarios. Either this is the support level for altcoins, or we cross and close the weekly below, in which case, sorry, I'm getting live footage from altcoin analysts right now. Should we cross and close below?
Tonight at 11.
Live footage right there. Live footage from altcoin analysts. Should we cross and close below the 200 simple moving average? Really a pretty strong death nail for the altcoin market cap. And again, the 13 exponential moving average on the weekly time frame serving a fantastic purpose here as well. So I did publish this over on TradingView. There is a little bit more analysis, a little bit more nuance in that post. You guys can go check that out at tv.crackencryptocurrency.com. Sorry, man. MT Coiner, dude, I'm so sorry, man. I just didn't, for some reason, like my audio is not picking up alerts. But thank you so much for the $15, man. Thank you so much, dude. Thank you for sending us over some of that magical internet money. Yeah. He says, sending some of this to you before my financially reckless wife gets hold of it. Got him. Thank you so much, man. I am sorry that I didn't notice that 22 minutes ago, man. I am a jerk. Thank you so much, man. Thank you for the continued support. Okay, let's go to let's go to glad somebody likes my Futurama references. Okay, so we talked about Bitcoin analysis from the monthly down to the daily. We talked about the total altcoin market cap. We talked about the BLX, Ichimoku cloud, and we talked about some other things. And again, I don't really feel that there's a lot of validity to be looking at any other USD pairs at this point in time right now, because they're going to follow Bitcoin's price. Bearish, guys. So let's take this opportunity to engage with the chat a little bit. (4:59 p.m. Eastern Standard Time, Windy Brown Eye. 4:59:59 p.m. to be precise. It's when the CME futures expire. To the best of my understanding, that is when the markets open and close. So 4 p.m. Central Standard Time. Did the weekly 55 and 100 cross up before the 2018 run? You mean the 2017 run? I don't know if the 55 and 100, are you talking about on Bitcoin's price, on spot price? I think that is far too slow. 55 weekly and 100 weekly. Crypto Rick asks, hey, Justin, I don't suppose you could re-explain how to short 1x on ByBit and still enter trades at the same time? Sure, you cannot. But you can. So let's break that down. So if you ByBit, just as with BitMEX, does not allow you to place concurrent trades in opposite directions with the same account on the same instrument. So what that means is if you have one ByBit account or one BitMEX account, you cannot go long and short simultaneously on the same instrument. And by instrument, I mean on ByBit, there is just the BTC to USD perpetual swap contract. On BitMEX, you do have the XBT USD perpetual swap contract, and then you also have two futures expiration date contracts. So there are a couple ways around this. You can either have a separate account, in which case you would be, having the majority of your capital or, whatever your capital split is your business, but I would have more capital in your hedge account, right? Because that's going to be representing the capital that you're going to be using to hedge the dollar value of your holdings. And let's go over to Bitcoin's price as we kind of talk about this a little bit. So I would be, there we go. I would be, you would be hedging, right? So let's say you have $5,000, right? You have $5,000. So you're gonna deposit $2,500 worth of bit. I'm just giving you an example. You have $5,000 worth of Bitcoin. You have $5,000 dollar value in BTC, right? So you're gonna deposit $2,500 onto ByBit, right? Into your primary account, and you're gonna go short 5,000 contracts at 2x leverage. Okay, that's gonna put your liquidation price up and away. In fact, you'd be safe doing 3x leverage as well, in which case you'd be putting even less. So you're going to hedge your dollar value on ByBit, and then you're going to take, let's say, $1,000, which is hedged, mind you. So you're just operating from dollar cash value, and deposit that onto your second account, and you can use that as the basis for trades. And you can just let that sit because you've already hedged it on another account, so you don't have to worry about being short. Another nice thing about this is for management purposes, is you can take your full risk positional trades on the secondary account and just use the primary account to hedge. This can get overly complicated. It doesn't have to be the way that I pretty much described. Just having two accounts, one to hedge and one to trade on, is pretty simple. It's an extra step that I'm more than willing to go through to utilize ByBit. Because I think that their platform is superior, and I prefer trading there compared to anything else. But I will say this, the newer you are to trading, and really not the newer you are to trading, but this is more pronounced the newer you are to trading, the more stuff that you have going on, the more accounts that you have to manage, the more likely you are to make a mistake, right? And this is why a lot of new traders maybe should just focus on trading on ByBit or trading. I really don't recommend that people go trade on Binance, because what's on Binance besides altcoins, right? And it's not bullish to trade altcoins right now. There are times when it's just, you want to be on Binance. There's nothing to do but trade altcoins or Bittrex or Huobi or whatever you want to trade on. And I know that Binance has margin trading now, but it sucks. Why don't you go do that on a platform that was designed to do margin trading from the ground up? I hate Binance's margin trading. You have to borrow and return and blah, 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 just like Poloniex tried to do. And it never took off with Poloniex because that system sucks. It's not a good system. It's annoying. It is a second level of complication. And again, the more complicated that you make things for traders, the more likely the traders are going to be like, fuck you, dude, I'm going home. So that's one way you can do it. You can also obviously have an account on BitMEX, or you can have an account on Deribit, and you can hedge on either one of those and then trade on the other account. It's pretty much the only way to do it, man. Practically. What do I think of the results of the Kleinman case will be? Do I expect them to be liable for a large estate tax and have to dump it on the market? I think that is potentially going to be one of the most fundamental court cases that might come out, or one of the most fundamental decisions that might come out. I have no idea. That completely depends on the individual choices and decisions of those individuals of the Kleinman estate, of what they decide to do with the Bitcoin that they will receive from Craig. Now, Craig says he has access to the Tulip Trust and will be sending the Bitcoin over. So he's made that statement publicly. So it's my understanding that, if he does not send the BTC over, then he'll be liable for contempt. And so I don't know if Craig's talking out his ass again, which he really likes to do. I'm not exactly sure what's going to happen with that. It's something that I'm keeping my eye on, but it's impossible to be like, I have no idea what's going to happen, man. I mean, that's completely up to the individual choices of individuals. If I had to put money on it, I would assume that they sell a large chunk of it, at least. But again, I'm unfamiliar with the actual individuals who run the estate or what their thoughts are. I mean, I highly doubt that they're Bitcoin investors. Ken says, prepare for a massive Bitcoin rally. I sold out the other day. One chart to look at later is RBOB gas, if not already. Big down move today. And crude. Is there a chance the estate tax will be assessed based upon the value of the Bitcoin upon Kleinman's death? Well, that's why I say it'll be kind of an interesting case if it comes to court, if it's like an IRS court case, because the decision that is made off of that court case on how historical Bitcoin is to be taxed is going to be standing legacy. So put yourself in the government's shoes. Would you prefer to receive tax dollars for what Bitcoin was worth on Kleinman's death, or for what Bitcoin's worth now? So it'll be interesting either way. Dun, 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 dun. Dun, 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 dun. We've got some really cool stuff. Oh, by the way, you guys want to talk about Bitcoin trading volume? Remember how we talked about how significant that trading volume was on the 25th and how it was going to lead to a massive down movement? Look at the volume on the 28th on the big down movement. I just wanted to point that out. Just massive. The biggest volume that we've seen, obviously, over the last 30 days. The order book is massively stocked to the buy side. Massively stocked. By the way, there seems to be a rogue bot on Coinbase. I don't know if you guys saw this, but I was watching the order book earlier, and I don't know if it's still operating right now, but there seems to be some algo that is market buying and selling about 10 Bitcoin, about 9.37, over and over again, right? Market buying, and then pretty soon after market selling, and then market buying, and then market selling, and then market buying, and then market selling. So I don't know if it's a rogue algorithm or if it's a bot gone wrong, but that's $100,000. And one comment that, we hear kind of a whole lot is that, well, it's washing dirty money, right? So somebody, why would something like that be occurring? Is it a possibility that it's an algo gone wrong? Yeah, but I mean, that's a very slim possibility. Why would someone be constantly marketing, buying, selling Coinbase? And again, it's very, very unlikely that that's a spoof volume bot. Spoofing doesn't take place on Coinbase. Whoever thinks they are being sold on the market, upfront payment of X, he will sell to institutions. Well, yeah, I definitely think that an amount of Bitcoin that large would be sold OTC, for sure. So its predictability for which way the market will go, I think, is slim. But again, we've also seen the market, and again, in my opinion, like, news typically comes out after a movement to justify the movement. But we've seen the market do crazy things on less speculation. All I'll say. This is still front lines, man. People are very irrational in this space. In current events, rejection from the 21 exponential moving average. Peckham08, thanks so much for joining the community over there, my good friend. Let's see, we got a little bit of bullishness here. Good target to take profit, to buy on the break above the 13. Very slim margin right here, though. Again, just not anything that we want to be messing around with. Kind of lower the bar here a little bit from 98.46 to 98.12 is, I think, how high we might see a wick. Just to break down like why I think that would be. Grab for liquidity above this shelf. 55 exponential moving average, our secondary baseline on the daily time frame. So watch for that. This is a break and a retest of support, so we'll see if we can get a little bit of a bullish movement out of this. But again, doesn't really switch my directional bias. Poke it, is it moving? Hey man, do something. Do something. All right, guys, you know what time it is. 3 minutes until break, and then we're going to come back. We're going to do Forex, and we're going to break down the current events and engage with the chat a little bit more, guys. So let's do this. Hey, guys. Didn't notice you over there. As a professional trader, I am commonly asked what metrics I think are important to evaluate before depositing funds onto an exchange, and I always say the same things: security, ease of use, and customer service. In the realm of cryptocurrency, you're taking a chance depositing your funds onto any exchange. Doesn't take more than a cursory glance at history of exchange hacks to understand the vulnerability of exchanges, but it is a slightly different day and age, and if you are wanting to trade cryptocurrency, that is a risk that one must take. So you have to look at track records, you have to look at security protocols, and you have to look at reliability when you make that decision. Secondly, ease of use. An exchange interface needs to be easy to use, interfaceable with whatever module that you want to do your trading. It has to provide you good features, not be littered down with clunky proprietary nonsense, but also allow you to do some more advanced stuff. Generally in the realm of crypto, this means setting conditional stop orders. It also means being able to set trailing stops. But the third one, customer service, that is what I am a stickler on. I continue my assault campaign on Kraken for outsourcing their customer service to Zendesk, which is inexcusable. If you guys do not have enough money to hire customer service staff of your own, quit. So, anyways, guys, the exchange that I utilize to trade my Bitcoin futures on is ByBit. It has been a pleasure utilizing their platform, and mostly because of their customer service, because it is the first platform that I've been able to discover that actually seems to give a hot damn about their customers' user experience. Every single issue that I've ever heard about with people having with ByBit has been resolved by their customer service, and that fact alone is why I continue to use it. If you guys would like to check out ByBit for yourself, you can use the link down in the description, bybit.krakencryptocurrency.com. If you use that link, they will give you up to $60 based on your deposit so that you can utilize that in your margin trading bonus. You cannot withdraw that $60, but you can withdraw all profits that you make from using it, and should you incur a loss from any deposit of your own, they will take that $60 first, giving you a nice window of opportunity. Now, don't be silly. Crank that leverage slider up to 100x and do something you're not supposed to do. Be responsible and trade safely and check out that link in the description. So we're going to take a break, guys. When we return, Forex, the news, and anything you guys want to discuss. Don't go anywhere, and we'll be right back. Hey guys, welcome back to the second hour of the show. If you missed the first hour, I don't know what to tell you, man. I mean, we only just unlocked the tools for financial freedom and liberty. I'm just being facetious, but we did break down Bitcoin's market activity all the way down from the monthly to the daily. We talked about the altcoin market cap, and we talked about the danger level for altcoins right now, which is beeping red alarm, red alarm, red alarm. And now we get into current events of the day, chat engagement, and Forex. Yes, Forex. So let's get back over into the charts. Yo, here we are. Okay. How are you guys doing? By the way, I watched the debate last night at the Soho panel between Saifedean Ammous and what's his name from the Cato Institute. It was a very, very, very good debate. I think that if you guys haven't checked that out and you want to understand some fundamental reasons either to be pro or against Bitcoin in the terms of monetary adoption, that you should definitely go check that out. It was a very, very good debate. Thank you, Peckham. He says, where the F has this channel been? Months watching others. This guy seems decent. Pro setup. Well, thank you, man. I try. Been around for a couple of years, man. Wally. Dings for missing the first hour, man. Dings. What's going on, man? Yeah, I don't know how. So I don't know how to allow him to post the link. I'm totally fine with it. But we did disable that because, unfortunately, errors occur, problems occur if we do allow people to post links. Yeah, just search for the Craig Wright timeline, or just leave a space. There you go. In fact, I think I'll watch that myself after the show. Let's go find it. Here it is. First hit on YouTube. What's up, dude? Man, nice looking couch. I'd say your saturation filter is a little too high, though. A little bit too much exposure there. But hey. Yeah, I mean, he definitely could, but I think he, Safe made the main point is that, we don't want to compare Bitcoin to PayPal, Venmo, credit card transactions. That's not what it's designed to do. It's designed to be hard currency. It's designed to be resistant to government attack and to really be the only alternative to central banks, because Venmo, PayPal, all that stuff can be easily ported on top of Bitcoin because Bitcoin is settlement. Bitcoin is the settlement layer. It is not the peer-to-peer, or excuse me, it's not the peer-to-peer. It is not the instant. It's not the instant validation, because all of those methods, credit card transactions, Venmo, PayPal, all of those things that happen instantaneously, are not final settlement. Final settlement takes weeks and weeks, even cross-border central bank payments, as he's talking about, where it's easy to send dollars. That's not final settlement. Those are ledger entries, not only in PayPal servers, not only in Venmo servers, not only in Capital One servers, but also in central bank servers when they're doing ACH wire transfers or bank transfers, bank to bank. Those settlements take weeks and weeks and weeks, whereas Bitcoin, you have settlement in an hour. So it's very easy to port all those things on top of it. Things like the Lightning Network. And again, as an emergent technology, we will just continue to see new alternatives to this. But the concept of porting Venmo, PayPal, credit cards over to Bitcoin and just using Bitcoin instead of the dollar as the actual settlement layer is fairly trivial and easy to do. So, having said that, let's go into dun 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 dun. We got stuff to talk about today. So let's go over to the news studio. And so we're over here in the news studio with...
And now, the news you trust, the stories you need to hear. Because in the day and age when we get our news sources from YouTube and Twitter, let's listen to the guy with the good microphone and the nice-looking studio.
Ventriloquism. Very good ventriloquism. So, all right, so via whale alerts, we have intel live from the streets, showing that Ripple has just made a large delivery to the tune of 522 million ZERP tokens, about $133 million worth of XRP. Could this be an OTC deal heading to an exchange account? Or perhaps it's part of a use case partnership, such as the unconfirmed story that we'll look at, that it was a payment to the BitGo wallet to set up their payment rail for XRapid. Or maybe it's related to the announcement from Japan's SBI Holdings, announcing their shareholders will soon receive a dividend in the form of XRP. So here's the original, where is it? I know it's over here somewhere. It's up here. So here's the original whale alert. This came across the radar. 522 million, that's milli with an M. XRP, about $133 million, transferred from Ripple to an unknown wallet. International Monetary Fund. Oh man, you know, sometimes Twitter's just so good, man. Just so good. Just so good. So potentially, So the biggest speculation is that this is going to BitGo to set up their payment rail for XRapid. The other idea is that it's going to financial giant SBI, who is going to be distributing dividends to their shareholders in XRP. SBI has been invested in Ripple since 2016. They are a financial firm with a market cap of about 522 billion, that's Billy with a B, offering brokerage, investment banking, and foreign exchange services. They've been a longtime partner of XRP. And as I said, invested in XRP as early as 2016. Did I say XRP? I meant Ripple, because investing in XRP means buying the token, and investing in Ripple means you make money when Ripple dumps XRP onto the market, onto the hodlers. Yes. Sorry, what? What's that? Oh, we've got live footage. We've got live footage of XRP coming in right now. That's... The line broke. So let me know what you guys think about that. Just our typical... Print out your picture, cut it out. Cut out the size of your face and put it on a lollipop stick. When you play the radio-like recording of your voice, pop that pic in front of the face. That's a good idea. That's funny. Wally, thank you so much for coming with the $5, my man. Throwing them bands. Hopefully you're doing well today. Good day in the market for you, I see. Hell yeah, brother. Always much appreciated. The man, the myth, the legend, the one, the only. Get a high quality lollipop stick with this donation. Be getting them high dollar lollipop sticks, man. Not them cheap ones. All right. So, although Portugal is already well known as a European tax haven in the crypto space, there has been a recent clarification from the tax authority in Portugal, coming in the form of an official response to a tax liability inquiry, from a Portuguese mining company. So, while cryptocurrency income was already tax exempt in Portugal, it's also now clear that trading and remuneration in crypto is also free from tax obligations. And as a result, oh, hold on a sec. Oh, that's personal research right there. My bad. All right. Sorry, that was that's the order book down at 9,000. Good stuff. One last little thing to talk about here today. Kind of a slow news day, guys. All right. Right-wingers, prepare to be triggered. It would appear that in an effort to calm markets and assure the public his trade war approach to China is the correct strategy, which it is not, and has never been, President Trump apparently, supposedly, lied publicly about there being promising communication with the Chinese. Instead, senior aides at the White House are said to have revealed to CNN, so again, huge grain of salt here, that Trump, quote, was eager to project optimism that might boost markets. With a re-election campaign looming and Trump's focus on market and economic performance, it seems the bombastic president is willing to embellish details in order to shore up support for his policies. Huge surprise there. So, Genetics RVG, thanks so much for the sub on YouTube, man. Let's see here. Quote from Peter Schiff. Trump now admits that he made up the late night phone call from China so as to manipulate the stock market higher. Right, but let's break that down for a second, you know? Trump like, guys, don't worry. I got the call from China, man. I got the call from China. It's all good. Price is going up. China's capitulating. You know, I've been, you know, I'm pretty, I kind of have Ben Shapiro's take on Trump, you know, as somebody who leans more toward the right. You know, when he does something good, I'll be like, yeah, man, that was pretty sweet, dude. And a lot of the stuff that he's done has been pretty good. And when he does something stupid, I'm like, yeah, man, that was fucking stupid. And the trade war was a terrible idea in the first place, right? The entire tariff idea, the entire, you know, trying to go against China economically, it's been a terrible idea from the start. It's a tax on the American people. Tariffs are taxes on your citizens. Tariffs are taxes on the body populace, especially for business owners and producers and the manufacturing sector, which he claims to care so much about. So I don't know if this was ignorance on his part, or just, again, you know, here's the thing, man. Every leader, every single individual, but it's just more pronounced with leaders. They're going to do some good things and they're going to do some bad things. And everybody's going to come into the market. Everybody's going to come into the public sphere with their own biases and with their own kind of mission statement. So I don't know if this was like a personal mission statement for him or if he just genuinely thought this was a good idea. Maybe he did, you know, economically for America or politically for himself. But I mean, it's going to go down as probably one of his biggest mistakes. Now, again, I'm pretty supportive of a lot of the things that he's done, but this was not good. But the trade war did help Darren Garish get a refinance rate on his house. Good stuff, man. But yeah, I mean, it's pretty clear. You know, Trump looks at the indice prices, looks at the stock market as kind of the thermometer of whether he's a popular president. It's very hard to kick out an incumbent president when the market's doing very well. At the end of the day, human beings are motivated by dollars and cents. And if people think that it is in their economic self-interest to keep Trump in office, then they will, especially because I think that it's pretty clear that having somebody of the left, again, I don't know, this is prepare to be triggered. Left-wingers prepare to be triggered. You know, I think that it's pretty clear that a lot of the economic policies that those on the left are advocating for would be fairly bad for people's pocketbooks in the interim and in the long term. What's that? Is that we've got live results of my of the thumbs up on this video from both the right and the left after the political comments. Got him. All right, let's go over to the main charts. It's really all I had to talk about today, guys, as far as that goes. Let's reposition here a little bit. Jack says, yep, it is about pocketbook issues, not identity politics that Main Street cares about. Typically, yes. You know, because, issues, social issues should not be resolved at the federal level. That's not the federal government's role. It's not even the conversation that we should be having at the federal level. Government's small enough to drown in a bathtub. That's what we want. That's what we're trying to transition to. It's up to individual communities, individual families, individual states to make up their own policies and ideas about things of that nature. But again, that's the difference between liberty and totalitarianism. You shall think this way, enforced from above. You are free to think however you want, enforced from below. Gui says, I'm Portuguese, Justin. If I can help in anything, tell me. Well, might be crashing on your couch, brother. All right, so let's go break down Forex. We'll do our Forex analysis of the day. And we're going to start off with my open positions. Go ahead and go to the daily. Excuse me. I decided to not go on the Canadian Swissy. I decided to not go with the third risk long setup. Although that would have been, excuse me, I did. What am I thinking? I did decide to go with the third risk long setup. Silly. But look at that. My limit order didn't trigger. I mean, I literally caught the top of that wick, but my limit order did not trigger. Shame. Shame. Hmm. 16 pips. And I had 35. So here's what we're going to do. We're going to cancel our sell limit order. And unfortunately, we're going to market sell these 1,910 contracts. And we're going to slide this stop loss up to break even. All right. It just is what it is, guys. Let's get our tools out and ready. We're going to need our baseline. Good. We are on Forex settings. Good to see. All right. Good to go. We've got a rising explosion level on today. So if today closes as it is, potentially re-entry opportunity. But I already got my entry. I'm going to be comfortable with that. And we will now just wait. Euro Swissy. Euro Swissy. Not doing too hot. Not doing too hot. Did end up closing just a little baby bit above the baseline, but then pretty swift and harsh rejection from that. Haven't triggered my stop loss, but this will probably be a closing loss for the day on the Euro Swissy. Go over to the Euro Dollar. The Euro Dollar did amazingly well. I did take the Euro Dollar short yesterday. Just hit my first take profit, so we're going to slide that stop loss down to break even. And we're going to let that baby ride. Big drop down below support, and the levy broke on the Euro Dollar. Pound Kiwi. The Pound Kiwi is a discretionary short from this order block at the top. So I've got a limit sell order set right here. Now, if I'd have looked at this earlier, I would have caught the sell right here and already hit my take profit, basically on the same candle, or at least on the next candle. But we're going to try and go for it again. We're going to target that area for the limit sell And we're going to try and take price back down to the qualifying line. Hasn't triggered yet, so that position isn't open. Pound Swissy. We did take the pound Swissy long. We've had this trade open for a little bit. We did come back. We were in drawdown for about 1, 2. We're still in a little bit of drawdown today, but we're right back up at about our break-even price. So let's take a gander. No. And no. So we'll not be exiting this trade. We'll continue to, as Murray Rothbard said, screw them. Hold out for more. Dollar Swissy triggered my first take profit. I went long on the dollar Swissy right over here. 1 day of sideways consolidation and then expansion. So hit the first take profit today on my dollar Swissy trade. I've already moved my stop loss up to break even. And we've got the dollar yen that's open. The dollar yen has not moved as precipitously as I'd like it to. You can see we took the trade. Actually, I had to trade a little bit after the daily candle closed yesterday. Spreads were a little bit higher, but it is what it is. Looking like we're going to close below the baseline on today's candle, so that'll be a small loss early exit most likely. And I did take the dollar yuan short. I did take the dollar yuan short in drawdown on the dollar yuan. Got my stop loss right here, my buy limit right here. So we'll just kind of wait and hold on for that one. I don't see any unqualifiers yet at this point in time, and we do actually have everything confirming to strengthen the short. So I won't add to the position. I did half risk on this. So we'll see. But other than that, pretty happy overall day and good profit. Took profit on that and drawdown on that. Took profit on that. Waiting for that to get filled. Waiting for that and slight drawdown on that. Took profit on that and slight drawdown on that and then slight drawdown on that. Do I think Binance will impact this market with the closing of the exchange to the United States customer? I do, and I think that's been impacting price for a while. I think that's one good fundamental reason why price has been bearish. At least for the altcoin market, for sure. Got a spare room, no problem? Awesome, dude. Is that 3 commas that make it possible to make trades directly in TradingView? No, that's just TradingView. TradingView is compatible with the broker that I trade Forex on, which is Awanda. Just got it literally right down here at the bottom of the chart. Just log in to Awanda from TradingView and boom. Let's look at what we haven't entered yet. Aussie yen. Getting a potential long here. But no volume. And below the 0 line. So nothing to do there on the Aussie yen. Aussie Kiwi we're already long on. Aussie dollar. Aussie dollar's looking like that euro dollar right before it went kablooey. We do got a rising explosion level. There's just not enough momentum to take it, man. Just not enough momentum to take it. But wick down into demand, and, you know, price doesn't care. I would say that's pretty bearish, man. But we'll wait. We'll wait for the breakdown. CAD yen rejection from the daily baseline, so reversal baseline bounce. Other than that, we got nothing. Ooh, Swiss yen was a good short yesterday. Didn't get the signal until today. Although, you know, if one would have taken, we did have the primary initiation from Wadatar. You can see that right there yesterday. Yeah, on a nice up candle too. So you would have caught a fantastic trade off the Swiss yen. Too risky today. Yeah, too risky today. Ooh. Now the Euro Aussie looks good to me. Closing below the signal line. in the range. Primary initiation. Topping below 0. I like it. Euro CAD would have been a good setup yesterday, but it just wasn't there. As you can see, we were below the dead zone. So, nothing. Already in the Euro Swissy. Euro Kiwi. Nothing. See if there's a reversal trade. Not really, just one purple dot of death. Euro Pound is a do nothing trade. Euro Yen. Breaking out to the downside, but just too risque. Pound Canadian. Did set you up for a nice reversal baseline bounce. You still have the opportunity to get out of the trade at almost no loss. But we are not going to be shorting the Pound CAD right now. Pound Yen, same thing. Reversal baseline bounce. Down to the qualifying line potentially. Pound Dollar. Almost geared us up for a short, but not yet. A little bit of ranging behavior. I'd expect to see a little bit of ranging. Hopefully we can get that. Wadatar getting bearish. And Kiwi Dollar's just falling off the map. As you can see, I did ride this down most of the way, but gave up the ghost. I caught the meat and potatoes of the trade. That's all I care about. Same on the Kiwi CAD. I didn't ride this one down as well. Kiwi Swissy, nothing. Kiwi Yen, no. Dollar CAD, no. Maybe a breakout trade. We almost got PTP all there, and I kind of like the price action. Yep. Let's get Minx crossing and closing above, baby. Bottoming at 0, hidden bullish divergence. Let's put that on the watch list. Pound Aussie. No. Nothing on the Aussie CAD and nothing on the Aussie Swissy. Ooh, maybe. Yep. Take the Aussie Swissy long. So longs on the Euro Aussie. Sorry, short on the Euro Aussie, long on the Aussie Swissy. And potential long on the dollar CAD. Potential. I need to see some things. So maybe not tonight, but we'll see how it looks Sunday night. Not trading, Andrew. Cat is so stupid right now. Is there a commodities watch list I can find somewhere? Yeah, I can make one for you. I got one right here. My CFDs. I mean, basically, corn, natural gas, sugar, soybeans, wheat, crude oil. So crude oil, you'd be trading West Texas oil. Or Bentley crude. Am I going to do a show on Monday or am I going to take a 3-day weekend? No, I'll be here on Monday. We labor on Labor Day. in fact here, Wendy. Serezka K, thank you so much for joining us over there on Twitch. Let me export this watch list for you. There you go, Wendy. I just posted it in the premium announcement section of the Discord. Oh, man. Okay, that's pretty much par for the course. See if we can get some VPVR confluence. Yeah, that's about it. So movement up into a low volume node. Tap for liquidity. Down goes Sally. Yeah. This is it, guys. Low volume node coming in. Actually, right in that level that we talked about. 9,000. Goaty says, hey man, did you see the huge volume on BTC Korean won today? Last time this much volume there was before the $6,000 drop. Thoughts? Let's go look. All right. I wonder if I just want to go look at the... Well, you know, I kind of pointed that out when talking about the... Did I like somehow like delete that? Oh, here it is. Duh. Trading volume. KRW. All exchanges. No comparison. October 31st, 2017 is when we had the most. October 31st and November 30th. And September 30th. And so there's a huge volume spike from August to October. And not really a whole lot right now, man. To be honest with you. I mean, we did have a lot, you know, just a little bit ago, but nothing compared to the movement over here on the 28th, which was the movement to the downside. Yeah, it's actually relatively tiny volume historically. When Justin is focused. Calm like a Zen master. Mile High Freedom says, is Binance closing priced in yet, in your opinion? I thought it would have a bigger impact. No, not really. I mean, to a large degree, yes. But we have to realize, like, how irresponsible a lot of cryptocurrency traders are. Like, they're going to wake up to an email one day. A lot of people are going to wake up to an email and it's like, hey, you're not allowed to use Binance anymore. And they're going to be like, oh, damn, sell. Sell into Bitcoin, withdraw. So could that be bullish for Bitcoin? Yeah. Because they're going to have to sell into Bitcoin, i.e. pushing the price of Bitcoin up. But even that's not even entirely valid, because that would increase the supply on Binance. So I don't really think that it's bullish at all. I think it's bearish. The less markets that Americans have to participate in, and Americans are wielding the largest majority of volume right now, that's not good for price. RBOB? Yeah, let's check out RBOB. I would be quite bearish on this, sir. Got Minx about to cross and close below the signal line and below the zero line. You've got Wadatar Explosion giving you a primary short signal on the monthly. You've got the Fisher crossing under on the monthly, letting you know that the bullish fun is over that started on this candle right here. Below all your major moving averages on the monthly. Let's go over to the weekly. Just broke down from your secondary baseline on the weekly. That's pretty nasty. You've had weekly bearish signals since right over here when we cross and close below the signal line. And when Wadatar gives you the primary sell signal right here. You also cross and close below the zero line on time transformation on that same candle. Let's go over to the daily. Yeah, this is nasty, man. The only thing that you have going for you would be this. $147 to $144. Maybe. Quadrigo. ATR is 0.055. Something like that would be a reversal trade, targeting that order block, i.e. bullish breaker. That's it, man. Let's see if we have any confluence on the weekly with that. Anything? Yeah, you got a weekly breaker right here. Yep, so basically right in that same zone. Where I want to ride my chocobo all day. Let's do it like this. Visibility only on the weekly. Visibility only on the weekly. And then we can go back to the daily. Delete, delete. Go back to the weekly. Visibility on the hours. Visibility on the hours. There we go. Either like 160 or 162. I see what you did there. That is a lot of volume. So a trend doesn't end or begin without a lot of volume. And I think that this all comes back to, we can see that the massive amount of KRW volume coming in right here on this movement, obviously, and it's a consolidation candle. So a lot of people selling in and trying to buy at the same time. That's why the candle is a doji, because it represents pretty much equal buying and selling in massive amounts. And that is an epic battle between bulls and bears that you don't really want to get caught up in. So being as all the technical indications are bearish, if you are not in position, this is a time to be waiting, because the movement that follows this will most likely have legs. If we go up and break some of those levels of resistance, that's going to be a pretty bullish sign, especially with that volume coming in the BTC KRW. And if we continue to drift downwards, again, that's even a stronger initiation of the bearish trend and a true break of this pattern. You don't really want to get caught in the crossfire, if that makes sense. You don't really want to get caught in the crossfire. Man, that all just came in too. You know, there's a lot, you know, just looking at this, I would say that the majority of the volume came in on the buy side. And then declining volume on the retracement. Which would actually be a bullish sign, generally. But then they got hammered right here. And price is reacting to that volume. Justin, how to get the daily baselines on the chart? Just go to tv.crackingcryptocurrency.com and you can use the CC EMA indicator if you just want to pick a baseline. Just test out which one works best for your trading strategy and just disable the other ones. That's how you do it, my man. We have the same volume profile before the $6,000 drop. That's what's scary. It was at this moment that he realized market makers were not making the books anymore. I mean, that's what collapsed price is, just people stopped buying. Hashtag when BitMEX stopped deciding to buy with Tether. The selling was always there. Yeah, definitely more volatile, definitely more rangy, but I mean, I agree, man. I've got a bearish bias. I started off the show with monthly, weekly, and daily short setups. Has it moved yet? A little bit. About this much during the show. Right here, Tran. To answer your question, Tran. So Bitcoin doesn't get taxed. Taxable events are taxed. So if you transfer cryptocurrency, if you trade cryptocurrency, if you make a profit from cryptocurrency, it's taxed. It's a taxable event. Well, you know what time it is, guys. Hey, what's going on, you lovely, sexy people over there? I didn't even notice you over there. Were you there this whole time? Thank you so much for joining me for another exciting episode of Breaking Bitcoin. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. I want you guys to go on and have a fantastic fantastic Labor Day weekend. It is Friday. We will see you guys on Monday. Make sure to leave any questions, comments, opinions, sarcastic remarks, or death threats down in the comments section down below. If you want to support the show, make sure to subscribe, follow, share it around, engage in that comment section down there. Hit the thumbs up button on your way out too. We highly appreciate that. Also, if you guys want to catch the podcast at any time in the future, maybe you're on the go, you're running, you're jogging, you want to know what's going on in the cryptocurrency market, make sure to check out the podcast at breakingbitcoin.money. We are available on Podbean, Stitcher, Google Play Music, Google Podcasts, and iTunes, as well as many, many others. Go check them out and see if you can add your favorite podcast catcher today. And as we move into the weekend, guys, I want to end with this thought. You know, as the good book says, he will come like a thief in the night. And we do not know when the large moves in the market will occur. And we do know that they come like a thief in the night. So we have spent extensive time on this channel. I've spent extensive time teaching you guys in the live and also for all the premium members as well in the Discord, how to hedge, how to protect yourself, how to be patient, how to work on your psychology, how to execute with conviction. All these things are going to be important. Now, for those of you who are passively holding Bitcoin, I want to make this statement very well known. If you are in Bitcoin for the long haul, because you do see it as the logical replacement as hard currency for the world monetary settlement layer, then it doesn't matter. It doesn't matter what price is going to do. If you have not put in the time and the work to be a trader, then attempting to buy and sell is not going to be in your best interest. You're best to just focus on whatever you do as your primary form of income, stack your Bitcoin up on the side, because that is the strategy and method that has worked well for people in the past. If you want to gain alpha and beat the market and view cryptocurrency trading, which is the most volatile market in the world, i.e. the most attractive market in the world to trade, and earn and treat this as your active source of income, which is absolutely possible out there for those who are willing to apply themselves, then remember, psychological control, emotional control, discipline, position sizing, long-term thinking, all the lessons that we teach, guys. All right. Now, if you're new to trading, if you'd like to learn, or if you're an experienced trader looking to sharpen your skills, make sure to head over to premium.crackingcryptocurrency.com to trade along with us more closely, learn how we do things, and learn our rules, as well as use our tools. That's it for me, guys. Whoa, that's not a good omen. That's not a good omen right there. All right, guys, I will see you on Monday. You've all been wonderful. Thank you so much. Make sure to leave a comment and hit the thumbs up button on your way out, guys. Trade safely.